Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's go to the topic du jour, and that's about Trump tariffs and how it actually could affect growth, for example. We're looking at economists kind of reevaluating the impact of policies on the U.S. economy. And then the sequencing, right? If you have tariffs now, but then you have tax cuts later, what that winds up looking like then for growth. Enda Curran is Bloomberg's Global Economy Reporter, and he joins us now from D.C. What's the scuttlebutt among economists when it comes to President Trump's tariffs policy?
I think moving faster than expected, Alix, is one way to think about it. I mean, to be clear, there is no, surprise here that the president is either imposing tariffs or that he believes in tariffs as a tool of trade policy. But I think there is a sense of shock at the pace of the moves. Remember a couple of things. His trade team isn't actually confirmed in office yet. His Commerce Secretary Howard Lutnick and Jemison Greer's trade representative have yet to be formally appointed to their roles. There was an executive order on day one of the inauguration setting out the remit for a study into U.S. trading policy with partners around the world, but already we've had threats of tariffs on Colombia, threats of tariff on Mexico and Canada, actual tariffs implemented on China, 10% across the board. Also, that's new territory, not just intermediate goods across the board. And of course, now we have the expected announcement of tariffs on steel and aluminium that the president talked about yesterday, and the reciprocal tariff idea that he's also floated due for detail again this week. So, it's easy to say this isn't a shock. He spoke about it during the campaign, but the breadth and pace of it, I think, is catching people off guard.
So initially on Friday morning, when we got that report from Reuters that Trump was considering reciprocal tariffs that day, there wasn't really any indication of which country he was referring to. How are you all thinking about this whole concept of reciprocal tariffs and what the implications could be globally?
Well, the reciprocal tariff idea is going to be a very technical one. We really need to see the exact details of what the president is thinking about. But the rough analysis from people following this, trade experts, is essentially what the president is saying is if the U.S. Puts a tariff on one country's goods of, say, 2%, and that country puts a tariff on U.S. goods of, say, 10%, the president wants to level that up, to level the playing field. And the thinking is that this might be a replacement to the universal tariff of 10% that he spoke about. So different ideas there in the mix. But again, that's a technical one. We're going to have to wait and see in detail, but it certainly adds to the idea of more tariffs coming.
Mm-hmm. So the idea that the tariffs in themselves are no surprise, but it's the speed at which President Trump is moving on tariffs that is the surprise, which then raises the question of the quote-unquote positive parts of the administration, like deregulation and lower corporate taxes to then offset the hit we might take from tariffs. What do you guys expect in terms of the speed there?
Yeah, I mean, to be clear, the president and his team say that this trade policy, this hawkish trade policy, will drive investment in the US, will bring manufacturing back home, it will raise revenue for the government, and it will balance trading books with the rest of the world, along with, as you say, this deregulation policy, making it easier to build things, making it easier to extract resources and energy from the ground, get infrastructure projects moving, it's kind of a pro-business deregulatory attitude writ large. So there is a case that the new administration will unleash animal spirits. Economists haven't yet downgraded their forecast or anything like that. The IMF singled out the US for its performance back in January. But, nonetheless, there's also a feeling that, wait a minute, right now, we seem to be at the very least at the pain stage of this. We're seeing those spending cuts at the federal level, those staff job cuts at the federal level, the tariffs, of course. The sweeteners have yet to arrive in the economy. That's the deregulation that you just mentioned. That's the tax cuts that, of course, haven't yet been agreed by Congress. So, supporters say, look, this is a big program here. Ultimately, it will lead to a stronger and faster growing economy. But a lot of skeptics are saying that there's potential for significant disruption and pain along the way. It's very early to say yet, but certainly plenty of skepticism and equal weight support on both sides of this.
So there's a lot of conversation about what tariffs could mean for different countries across the globe. But if we were to bring it back to the consumer, how exactly would that impact the consumer? Would we see countries just passing off tariff costs onto consumers? What does that look like?
Yeah, it depends on the level of the tariff, and it depends on the type of goods, right? So, for example, the last trade war between President Trump's administration and China was mostly intermediate goods, like components, materials that factories are buying off of China. Ultimately, didn't have that much of an impact on Main Street inflation. This time around, the president has put 10% tariffs on all the goods coming out of China and coming into the US. So that's like consumer goods, typical household baskets. Similarly, for Mexico, a big portion of exports from Mexico to the US was on food stuff like fruit and veg and on apparel. So if you start putting tariffs on those kind of products, then the question becomes, who's going to absorb it? Is the seller going to cut their prices and absorb that tariff, or will the buyer absorb the tariff in the US, or will it be passed along to consumers? And that's where economists say, hang on, some of this will surely have to be passed on to consumers, and that's why they say, in the first round effect at least, will be inflationary.
Well, and that's the interesting part. I was talking about this a little earlier with Isabel and Norah about commodities, is that commodities are efficient markets, so they'll just re-rate. So the price of the commodity will re-rate to account for the tax in order to have the consumer or the company, whomever's buying it, want to buy it. If I'm buying a coat, that's not the same thing. Like, that's not an efficient market. I'm just not going to buy the coat. And so there's different distinctions based on what's actually being taxed.
There are different distinctions, and you hear some Fed officials make the point that even the Fed officials have different views. Like, some make the point it's a one-off, we kind of look through that impact. Others saying, wait a minute, this could be the kind of start of setting off a longer-term consumer inflationary expectations. The University of Michigan survey at the end of last week showed that consumers are a bit worried about inflation now, especially due to tariffs. So it's it's not a very clear-cut impact on this and for either side of the argument. But remember, again, there's also a bigger picture view that you have those people who argue this will drive investment and employment, but there are also those who say will hurt consumer confidence and business confidence because they don't have certainty, they don't know how to invest. So there'll be a lot of confusion in the meantime until this trade policy does settle down.
So how are other global leaders responding to this? I know when I was watching the Super Bowl last night, I actually saw an ad from Canada about tariffs, and
I missed that.
Really, it was super interesting.
It wasn't like the weird cowboy hat thing. No, it wasn't.
It was
that.
not.
There was no mustache flying around. All right.
There was no mustaches, but it was a really interesting ad, and I'm just curious, what are you all seeing in terms of the response from other world leaders?
Well, again, early days. You get different response from different capitals, but broadly speaking, when it comes to merchandise goods trade, a lot of the messaging has been, what do you want us to buy? We're willing to step up. Mexico stepped up with putting troops on the border for that fentanyl and immigration issue, as did Canada. But Canada has also made clear that, they're in the market to buy US goods. The European Union has said that they're willing to step up and buy maybe more US gas or other products. You have Japan here last week. Prime Minister Shiba talking about $1 trillion worth of investment in the US, and this goes around. All of these world leaders make the point they're willing to invest and buy goods, but they're also making it clear that they will retaliate in kind as well. If the US pushes this trade policy too far, China has already retaliated. Literally today, those tariffs from China have gone into effect on agricultural goods, agricultural machinery coming out of the US into China. And of course, we've got some antitrust measures going on against some US companies as well. The EU have a playbook ready to retaliate if they want to. Canada had threatened to retaliate, as did Mexico. So, there's a kind of a play nice. We'll come and see, can we do a deal on all this? But if that doesn't work out, they're willing to respond as well.
All right, Enda, really appreciate it. Always the best. Enda Curran, Bloomberg Global Economy Reporter, joining us on Trump tariffs and what that does to growth.
You're listening to the Bloomberg Intelligence Podcast. Catch the program live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, wanted to get a broader take on the Trump administration and some deeper changes taking place nationally, particularly when it comes to diversity, equity, and inclusion. Marc Morial, CEO of National Urban League, joins us now on this. And side note, Marc was mayor of New Orleans from 1994 to 2002. Marc, did you watch the Super Bowl? Were you there?
Hey, I was there, and I was an Eagles fan because I lived in Philadelphia during my days in college at UPenn. And I tell you what, I didn't expect that outcome. I felt Philadelphia would win, but I thought it was going to be a competitive game all the way down to the end. It wasn't really a competitive game. The Eagles really, really dominated.
Yeah, they took it.
Chiefs. I think it was surprising.
It was from somebody who literally just started to understand football yesterday. I'm actually not kidding. I was like, what is this? Chiefs, huh? What is that team? Anyway, side note, I'm glad you went. I'm glad you got to see it. Either way, it was always a fun experience to watch. Marc, you are CEO of the National Urban League. It's the largest historical civil rights and urban advocacy organization in the country. What are you guys doing right now to combat sort of anti-DEI rhetoric and policy from DC?
So we are working very hard to get institutions, leaders, corporations to reaffirm their commitment. Jamie Dimon and JP Morgan Chase have done so. Roger Goodell and the National Football League have done so. Companies like Delta and Target, and there's an entire list. Those that have reaffirmed their commitment may not have gotten as much media attention as those that have walked away. I'm dismayed by those who say they have walked away. What every company in America should be doing is living up to the meaning of the Civil Rights Act of 1964, which prevents non-discrimination, or rather is a non-discrimination law which prevents discrimination based on race, creed, color, religion, and national origin. Many of those who are promoting from behind the scenes the anti-DE&I movement are trying to roll back progress this nation has made over the last 70 years. Women, African Americans, Latinos, Asians, Indigenous Americans, disabled Americans, LGBTQ Americans have had a chance over the last 70 years to participate in the mainstream of American life, in jobs and business opportunities, around corporate board tables, in elected office. This is a full-scale attack on all of that progress based on a false and misleading narrative that somehow diversity, equity, and inclusion promotes quotas and undermines merit. I take great exception to that, because what diversity, equity, and inclusion says is give everyone with merit a chance, not just some, not just men, not just white men, give everybody, including a chance for the opportunities that America represents. That's what this is all about. And so we are going to continue to work and fight and advocate for continuation of this country's commitment to equal opportunity.
Well, Marc, it sounds like last week was a really big week for you. You were inducted into the NOLA Walk of Fame on Thursday, and you received a humanitarian award, the first time a non-sports person was chosen for this award at the Super Bowl party on Saturday. So very big week for you. But back on the notion of companies walking back their commitments, do you think this is really just a sigh of relief for companies that weren't necessarily genuine about these commitments? Or do you think maybe corporations just want to have the freedom to make their own decisions without having to necessarily report and be held accountable in those ways?
Well, reporting and being accountable is what the law requires. It's always required that. That's our system of laws, our systems of the Constitution. But I think some companies are frankly being intimidated. There's a behind-the-scenes effort to intimidate, to defame, to threaten companies. I heard one story where a company was told that if they did not walk back their DE&I, this group would launch a social media campaign and show some lewd and lascivious videos that may have taken place at an event that the company co-sponsored. This is what we're faced with. Faced with a smear campaign, a campaign of attacks, a campaign of division, and yes, it is a campaign of hate. Major corporations in America operate under a rubric of law. They follow that law. That law makes things fair and equitable for everyone. All diversity, equity, inclusion is a program to implement non-discrimination laws. That's what it represents. And this nation cannot walk back. And we are going to battle and fight and work in the courts and in every way, shape, or form possible to ensure that this nation remains committed to equal opportunity.
Hey, Marc, it's really good to catch up with you. Congratulations on the host of the awards. Congratulations on the Eagles winning as well. Thank you so much for your time today. Marc Morial joining us there, CEO of the National Urban League.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Today we are joined by Michael Halen, and he is Bloomberg Intelligence Senior Restaurant and Food Service Analyst, here to talk about McDonald's earnings. So we have McDonald's sales that improved on stronger international results. What is your broad read on this, Michael?
You know, the most important piece of the report really is the U.S. recovery post E. coli, and we got some good news on that front. So traffic was actually positive in December, so I think that was much better than anyone had expected. They cited kind of a choppy January here, but the only region still impacted by E. coli seems to be the Rocky Mountain region where the outbreak occurred, and they expect a full U.S. recovery by the beginning of the second quarter, which is good news.
What about the rest of the world versus the U.S.? It was the rest of the world that really performed well, yeah?
Yeah, and a big part of that was just lapping like pretty weak year ago results, right? So we lapped the start of the Israel-Hamas war, and so the Middle East was stronger. Countries with large Muslim populations were also stronger, and then also China lapped a very weak result last year, and management cited some stabilization in that market, which is encouraging for them. So the easy comps was what really fueled international sales. You know, we're kind of more bullish on the U.S. moving forward than international, you know, because outside of the Middle East and China, Europe is we think is going to continue to kind of be an issue for them. The Eurozone is experiencing much higher inflation than the U.S., and that's really crimping low income and family spending on the continent.
Are people still buying the Big Mac?
They don't break out Big Mac sales, but they cited pretty strong results out of the chicken Big Mac, which I was kind of surprised about. You know, my associate tried it; he was not a big fan, but yeah, they cited pretty strong results out of the chicken Big Mac in the United States and other markets. I think France was who they called out specifically, and to the point where they're going to continue to bring it back as a limited time offer in the future.
So I was actually talking to an IB user, a Bloomberg user, about this. Why are McDonald's franchises elsewhere, like out rest of world, so much better than in the U.S. and that like you can get like super good food that doesn't taste like fast food? Like, why is that?
Yeah, Jonathan Farrow asked me the same thing this morning. He said he wants them all to be like the McDonald's in Italy, you know. And the answer I had there was just more discerning tastes, right?
That might be it.
No, but really, like, is it? I mean, does it affect margins? Like, what are the margins like in the U.S. versus rest of the world?
We don't have that information. Okay. You know what I mean? It's a franchise business, right? So. You know what I mean? So we don't have a ton of color on all the different franchise markets and what kind of margins they pull in. You know, the U.S. Generally is a lower margin for the franchise business just because they have a lot more franchisees and need a lot more oversight. The international franchise business tends to generate wider margins.
So I always used to think about McDonald's as a really cheap place, a discount fast food place, but prices are getting higher. Are we still seeing demand from lower income consumers for the brand?
You know, it continues to be the weak spot at McDonald's, and for anyone that has a lot of exposure to low-income consumers. So the entire QSR space, right? Jack in the Box, Wendy's, Burger King. You know, a lot of chains, struggled last year because of their inability to draw low-income consumers. You know, they're impacted most by inflation, right? We've had 4+ years of restaurant price hikes and higher costs across the board, right? And so, you know, chains that are exposed to low-income consumers are going to continue to press on value to try to bring them into the fold. You know, it seemed like it didn't seem like restaurant sales did improve for quick service in the fourth quarter, and we think a big part of that is just a reestablishing of their value proposition, right? McDonald's early last year got a lot of shade about the $18 Big Mac meal in Connecticut, right? And so they decided to push hard on value. And prior to the E. coli outbreak, October had some really good results. They were drawing customers in with that $5 meal deal, and traffic was positive for the first time during the year. So pushing on value has been successful for McDonald's. That's not good for their competitors because McDonald's has the most scale, right? But we think this is going to continue throughout 2025 in the quick service industry.
So just to confirm, you're saying there was a meal that came up to $18.
She totally missed this. She totally missed this one.
Yeah. It was one franchisee in Connecticut.
Of course it was Connecticut.
Right, had to be.
No comment.
No, fair enough.
But he was pushing back because he was dealing with a lot of inflation, and he was just he wanted to make some money on the Big Mac meal. He was trying to make a point in the press.
Greenwich special, they called it.
Oh wow.
No, I'm kidding.
So many things to think about on that. All right, Michael, thanks a lot. We're going to leave it there. Michael Halen, Bloomberg Intelligence senior restaurant and food service analyst, joining us on McDonald's.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.